Meet Takashi Kotegawa, the trader who turned $13,000 into over $153 million. Luckily for us, his story, along with his trading strategy, are very well documented. Tagashi's strategy consisted of 5 key elements, and in today's video, we are going to build both a scanner and a strategy that make use of those elements so that we have the tools at our disposal to replicate his success. Both the strategy and the scanner we build in today's video have already been uploaded on my website, daytradingstrategies.net. They, alongside over 130 other custom coded studies, strategies, and scanners within Thinkorswim, are available, all for easy import, all for one low price. So if you become at all interested at any point throughout this video, a link to the website is in the description down below. Key strategy element number 1 that made Takashi over $150 million day trading stocks is that the stocks he traded must be liquid. Liquidity in the stock market refers to heavy volume. You want to be trading liquid names, as that typically means that the stock has a much tighter bid and ask spread, which means you are actually able to get in and out at the price that the stock is currently trading at. There's much less slippage on your trades, and it means that you can get in and out exactly when you want to. There's not this void of volume that ends up keeping you stuck, trapped in trades. So on the Thinkorswim scan tab, this will be pretty easy to build. I'm going to add a filter. I'm going to add a stock filter, and we're going to add one for volume. And let's go ahead and set the minimum volume traded on the day to 1 million. 1, 2, 3, 1, 2, 3. Now I will only see stocks returned in my scanner that have traded at least 1 million shares of volume on the day. That already just took us down from over 38,000 results down to just 574. So just that liquidity check is already narrowing down the types of stocks we'll be looking to trade according with this strategy. However, when you're discussing daily volume as it pertains to day trading, you can end up getting some cheated results, right? You can end up getting stocks that are towards the top of the scanner just because, of course, they've traded a ton of volume today. It doesn't necessarily mean that they were trading a ton of volume at the time the trade was taken, which is what we should be targeting according to this key strategy element number 1. To fix that, I am going to build a custom column in my scan results that shows us the volume on the current 5-minute candle. That will give us a more finite sort of sorting way that we can sort, hey, what actually is trading the most volume right now, not just on the day as a whole. So to do that within Thinkorswim, I'm going to click on this little cog icon to the far right of my header names, into customize, and into look up a column. I'm going to type in custom. You'll see here something like custom 1 through 19. I have a custom 1 set up here. All that matters is that there is a scroll icon without a lock on it. This means you can click into that scroll icon and you can edit the code. So into the ThinkScript editor, I'm simply going to type in volume. That's it. That's all the data we want to see from this column. Not necessarily hard to set up, but very importantly, rather than seeing the daily volume, I want to see the 5 minutes. So click into this time aggregation box here. And from here, you can select any time aggregation provided to you by Thinkorswim. Of course, for us, we want to see the 5 minutes. Sure, I'll include extended hours trading. Why not? Let's go ahead and turn that on. Double click it so that it is actually in your running set. Now I can sort top down by this so that rather than the stocks that have traded the heaviest volume on the day appearing at the top of my results, the stocks that are trading the heaviest volume right now are appearing at the top of my results. And a lot of those will kind of end up being the same, but it's still important that we do that. So when we are trading stocks, according once again to key element number 1, we are ensuring that they are liquid right now. Key strategy element number 2 of Takashi's trading strategy is that he capitalized on overreactions. Essentially, he was taking advantage of dips, like very strong dips on stocks, oftentimes typically related to news, not always, but if there was a very hard drawdown in a stock, he was looking to buy it. Now, a rule like this within a trading strategy is where indicators come in. Oftentimes, indicators get a bad rap among beginner traders. For some reason, they are taught this idea that indicators don't work. And it's probably because sometimes beginner traders try to solely use indicators. And I get wanting to steer away from that. That's not the best idea. But you do need to be making use of indicators to objectify ideas like our key strategy element number 2 here. What I mean by that is we're looking for strong drawdowns, right? So looking at the SPY daily chart here, is this classified as a strong drawdown? Is this a strong drawdown versus this? Like, which one of these drawdowns would you actually be buying? You can't just say things like, I'm going to buy strong drawdowns. You can't test that. You can't prove that that works. You cannot build objectified statistics around that. And you shouldn't be trading any strategies that you haven't objectively proven using statistics work, at least in back testing. Then, of course, you move into forward testing, but it's very important you prove that they work in back testing first, else you just end up wasting your time. So, my favorite indicator for objectifying current strength, like is the stock strong or weak right now, is the relative strength index. The name makes sense, right? Is it relatively strong or is it relatively weak right now? This is, of course, shortened down to RSI being the name of it. But if we go ahead and turn this on, we can start to get an idea of what I'm talking about here. Let me move myself sort of out of the situation here. You can see the RSI breaks down below 30 on this dip here and on this dip here. It actually doesn't on this dip or this dip, and it just broke down below 30 on this dip here as well. So if that's the value we wanted to use for, hey, this stock is currently on a dip, we would run with that. We could test that. We could optimize that, right? Utilizing code, which is what we are doing in this video, we can easily optimize that. Well, let's try 30, let's try 35, let's try 40. Let's see what works best for us. For starters, let's go with the low value. Let's go with RSI value less than 30, meaning that the stock is objectively currently on a large dip. So let's build this objective rule into the scanner first. And now that we have an actual chart setup rule, we can begin building the strategy as well. But for the scanner, I will come in and add another filter. This time, rather than stock, I will add a study filter, and I'm going to simply click into the pencil icon here and into the ThinkScript editor, as I find this the easiest way to do it. I've been coding now in Thinkorswim for 5+ years. If you're interested in learning more about this stuff, obviously make sure you subscribe to the channel. It's what we talk about around here. But very simply, if I only wanted to see stocks in which the RSI indicator is currently less than 30, I would type in the name of the study as it's represented within Thinkorswim, which is RSI. Then, since I am referencing a study function, I need to put open, close parameters. That lets the machine know that I am referencing a study function. We're going to go ahead and leave all the parameters default for right now, so I don't need to enter anything within these parentheses. And of course, we only want to see stocks in which the RSI value is less than 30. Right now, let's run it on the daily chart just for example's sakes, because we're going to get into, because Takashi did all this with day trading. He was intraday trading. So we're going to get into how we want to tweak the time aggregation in just a minute when covering further rules. But for example's sakes, let's leave it on the daily time aggregation for right now. Let's go ahead and run this. Let's see what pops up. We go from like 570 results down to just 51. And remember, we are still sorting these results by the stocks trading the heaviest volume right now. So I can see the first result is LGMK. If I go look at LGMK, we should see a very weak stock. We do indeed. In fact, this thing has been below 30 on the RSI for a long time. this thing's getting absolutely hammered. Not exactly something that Takashi would be looking for, because this isn't like in a very quick overreaction that he's looking for on the intraday chart. This is just a very weak stock. But once again, what we're doing right now is just ensuring that the scan is working, and it does look to be doing so. Now let's begin building the trade strategy as well. Once again, we now have a chart setup rule, so we can begin working on that. I'm going to come into studies, into my edit studies modal, just like I would turn on any study onto the chart I wanted to, like the RSI, but I'm now going to click into this strategies tab. Then I'm going to click create. This is going to pop up the modal that we will begin building custom strategies within. You'll see an add order function line of code here. We'll use that later. For now, let's go ahead and give ourselves some room. So we have one rule ready for when we should be entering stocks according to this strategy. That being the relative strength index is less than 30. So I'm going to go ahead and define a buy variable, and I'm going to set it equal to, just like we did within the scanner, that RSI value being less than 30, and all your lines of codes with a semicolon. So right now, like, we're just beginning to build the strategy. Of course, nothing will happen yet. We haven't made use of the add order function. We don't even have really any rules around selling, either for stop losses or profit yet. This is just the beginning foundations of the strategy. Let's move into the next few rules, and we can continue to build this out. Key strategy element number 3 of Takashi's day trading strategy is that he had extremely short holding periods. Most of his trades lasted minutes to hours. He was locking in profits very quickly. He was aiming for consistent wins rather than large wins on every trade he took. Now we're starting to get somewhere with understanding Takashi's strategy. We now know his profit take exit strategy. So hopping back into our custom strategy code, once again by clicking on this scroll icon here, we can begin to build out the variable for the reasoning stored within it for when this strategy should be locking in profit. So let's go ahead and define a second variable. We will of course name this one sell. Actually, I changed my mind. Let's name this one profit, because we are also going to have a sell variable for the stop loss as well, which is the next rule of this strategy we're about to hop into. And for this one, to avoid confusion, at least right off the start, and we can change and optimize and test this later in the video. That's kind of the fun part of the video, where we optimize and find the best way we can pull the highest results out of this strategy. But for now, to keep it simple, let's use the same indicator. Let's say that the RSI is greater than 35. Not much of a bounce at all, but just once again, that RSI indicator to objectify whether the stock is strong or weak. If it bounces even a little bit from our entrance, let's go ahead and lock in profit on this trade for right now as our baseline to start with. Now from here, we are going to begin to make use of that add order function, which is the default line of code that exists when we built the custom strategy. This is the Thinkorswim Learning Center page for the add order function. The Thinkorswim Learning Center is an amazing resource. This is a free website that gives information on every single function available within ThinkScript coding and all the input parameters within it. I want to quickly showcase this to you all so you can have sort of a bird's eye view, at least, of what's going on when I am coding within this function here. The parameters are of type, condition, price, trade size, and then you just have some look and feel ones of color and name down here. We are going to code in custom values for every single one of these so that our strategy is more customizable, so that we can optimize it and make it the best it can be. So for our order type, let's change this from order type.buy auto to order type.buy to _ open. We're never going to enter short positions with this strategy, so I will never need to use this add order function as a cover. So instead, let's only set up the conditions within it to trigger true if it is to open a new position. Next is our condition, and this one's really simple. We've already built the condition and stored it within the variable named buy for when we want to enter trades. So all I need to do is type in buy here, type in the name of the variable in which our condition is stored. Next up, we have price. I want to buy the close of the candle in which the RSI is closing less than 30. Next up, we have trade size. This is a fun one, and this is actually where we can begin to get into a little bit of user customization as well, because every single person watching this video, the millions of you watching this video, all are going to want to apply a different trade size to the strategy. We all have different amounts in our trading accounts. We all have different risk profiles. We all have different trading goals. So a customizable trade size within code is imperative. I do this with every single one of my strategies that I build and publish on my website. I'm going to create a new variable. This time, instead of using the keyword define to initialize that variable, I'm going to use the keyword input. I'll show you what that does in just a second. I'll name it position size, and I'm going to set it equal to 25,000. That's something that I would be comfortable taking in my own position size on a strategy like this. Now, let me go ahead and quickly apply that. What initializing that position size variable with the keyword input just did, you may actually see it here in the strategy within the parameters or parentheses, of the strategy. You can see 25,000. If I come into the settings cog here, I can now very easily from the front end change this. If I only wanted to take $5,000 positions instead, all I would need to do is change that from the input parameters rather than having to hop into the source code and figure it out. So it just makes all that a little bit more customizable, a little bit easier for you to use if you are to import this strategy into your own Thinkorswim. And once again, I do that with all my strategies because I know every single person inputting my strategies is going to want to take different position sizes. So now for our fourth parameter of trade size, I'm going to reference that position size variable and I'm going to divide it by the current price of the ticker. So we will buy however many shares evenly divide into 25,000. That's how many shares we will buy. So we will always buy $25,000 worth of the position. Next up, we have our three look and feel variables. I'm going to type in color.green. I'm going to type in color.green. That's the tick and arrow color. And the last variable, by the way, I'm also saying variables. I mean to say parameters. You are always separating your parameters with a comma. If I haven't covered that yet, our last parameter is of name. So I'm going to open quotations, type in by, close quotations. That is now working as expected. If I now run this code, whenever the first time that this chart broke below 30 on the RSI, we should see an entrance being triggered. And indeed, here we have it. So we have one entry order triggering at the first time that the stock breaks below 30 on the RSI. Now, of course, nothing else happens. The trade never exits. We haven't built the add order function for the exit yet. So let's go ahead and do that now. So I'm going to go ahead and build out this add order function pretty quickly. I talked through the entire list of parameters on our first one. We don't need to do that all over again. Of course, our order type this time will be of sell to close. Our condition will be our profit variable. That is where we stored our condition for our take profit. I want to sell the close of the candle in which that condition is true. I will type in position size divided by close here again. I get asked often, like, Trey, wouldn't this sell a different position size? I actually only type this in for the optics so that the function in the code itself is easier to read. Since I am using a sell to close order type, whenever profit becomes true, it will sell your entire position no matter what. So this trade size variable doesn't actually matter in this case. Once again, I just type in the same value there for the optics. A code that's easy to read is almost just as important as a code that works well. So now we'll do color.red, we'll do color.red, and I will go with sell as my name, close the parentheses, end all your lines of code with the semicolon. As we now run this, you should see now the buy conditions are popping up more often because, of course, we are actually getting out of our trades. And let's just make sure it is working as intended. This stock is really bad, but here's a win. Let's look at a win. When the stock breaks below 30 on the RSI here on this candle, we do get in. Of course, the next candle is a bounce well up and above 35 on the RSI. So we go ahead and get out of the trade. We also have, let's just look at some more examples here. Below 30, buy. Above 35 on this candle, sell. Below 30, buy. I want you to notice something. It's a limitation of Thinkorswim that the buy and sell sort of prints don't happen until the next candle. So you see here, the RSI breaks below 30 on this candle, but it doesn't print the buy until the open of the following candle. And that's just obviously because the system doesn't know that this candle has closed below 30 RSI until it closes. And then the next tick after the code can confirm that that is true is, of course, the open of the next candle. That's why that happens. But you'll notice here that this arrow, this tick, is at the price that this bar closed at. So even though the buy is painting here, it's still placing the order and giving you the data based off of buying the correct candle. Same thing with the sell. The sell paints here, but you'll notice the tick, if I hover over here, you'll notice the tick, the line ends at the close of the previous candle because that's when the stock bounced above 35 on the RSI. Anyway, the strategy looks to be working as intended. What you'd really rather not have happen in a strategy like this is a trade like follows. You get into a dip and the stock continues dipping and you kind of have to hold through a lot of pain before the small bounce comes, resulting in a large loss. Well, Takashi didn't want that to happen in his strategy either, thus leading us to key element number 4. He traded with an extremely tight risk, and due to this tight risk, he was able to take massive size within his trades. And I'll leave this up for just a second to talk about bullet point number 2 there, that discipline is key. Takashi never averaged into losers. He never let the emotions get the best of him. And just to quickly rant, that is potentially the largest upside of trading with code. Code is not emotional. If you don't code it into your strategy, it's not going to do it. It's not going to average down into losers. It's not going to hold on to losers too long because of the sunk cost fallacy and emotions behind it. The code will do only exactly the conditions that you have programmed it to do. Anyway, let's move on to building out the stop loss within the strategy. Once again, for right now, I'm going to build a baseline stop loss condition. At this point in building a strategy, I don't really know if this is going to work yet. I just want to get some ideas out there. Then later in this video, we will optimize and find what actually works the best. But for right now, let's go ahead and define a new variable. I'll name it stop. And the idea I have for a very tight stop loss, which is key element number 4 to Takashi's strategy, is let's get out of the trade on the first candle that closes lower than our entry price. So pretty simply, I can just type in the close is less than the entry price function, end our line of code with a semicolon, and that should be our working condition for our stop loss. Once again, we need to add in another add order function with the order type of sell to close. This time the condition, of course, being our stop. Sell the close of the candle, do our optics position size. Let's make this one color yellow, just so it stands out differently from the profit sell. And let's go ahead and name it stop. If I've done this correctly, now any candle that closes below our entry price should immediately be stopped out. And that is true. But you'll notice here, and this is an issue that I sort of forecasted right after I built the buy condition and really thought about it. You buy because, let me look, the RSI breaks below 30, so you buy, then the candle closes below your entry price, so you get stopped out. But guess what? The RSI is still below 30, so the strategy just buys again. That's not really what we want to have happen. And this is actually a pretty simple fix. I'm going to come back into my custom strategy. I'm going to go up to my buy condition. Instead of using the operator less than, I am going to use the operator crosses below. Now, the buy condition, the variable of buy, will only return true on the exact candle that the RSI value goes less than 30. So the candle before must be above 30 and the current candle must be below 30. If I hit apply, that should clean this up. Indeed, it does. We buy, we get stopped out. Yes, the RSI is below 30, but it's not crossing below 30. So we're not re-entering, getting stopped, re-entering, getting stopped, re-entering, getting stopped. That is how we clean up that problem. Key strategy element number 5 is just an idea. It's not actually something that we need to add to our coded scanner or strategy. And it is that Takashi never used margin or leverage. He always just used the cash that he had on hand in his portfolio. I think this is just a good idea in general, especially if you are day trading and especially if you are day trading extremely risky moves like Takashi is. Let's not get it twisted. Buying huge drawdowns like this and expecting small bounces, that can be extremely risky. All it takes is really breaking your rules once, letting a loser really run against you, and especially if you're on leverage, you can really hurt yourself. So that was his 5th and final rule. Now let's move into getting the scanner set up to scan for day trading and adjusting the conditions within our strategy, optimizing, utilizing the statistics of the strategy to find what makes the most money. So when thinking about the intraday time frame that we should be trading this strategy on, because remember, Takashi used this as a day trading strategy in which he most typically only held trades for minutes at a time, I don't actually know yet if using the 5-minute time frame or say the 1-minute time frame would work better. That's something we will test as we are optimizing our strategy here. Let's go ahead and for starters start with the 5-minute time frame, as that's what I already have this custom volume column set up to read, the 5-minute volume, right? So on my scanner, I'm going to change this custom study filter that the RSI value must be less than 30. I'm going to change that from being true on the daily time frame down to being true on the 5-minute time frame. And I'm personally not going to include extended hours trading on this. If you want to trade pre-market and after hours, you can test it that way yourself by keeping this checkbox checked. I'm going to go ahead and turn it off. So let's run this scanner now. RSI is less than 30, and let's give our custom 5-minute volume column a second to load in here so we can see the stocks that are currently trading the most volume, currently the most liquid, as we remember that being rule number 1 of Takashi's strategy. So at the top of the list now, we have STSS. If I go ahead and load in STSS, this is a very weak stock. This thing just falling off a cliff. The RSI at one point actually reached down to single digits, which is something else that I want to consider, right? When looking at the daily time frame, getting below 30 can be seen as an extreme drawdown. When in a intraday time frame, the numbers can get even lower. The drawdowns can be even more extreme. So we might need to adjust that RSI in both the scanner and the strategy to be a little bit lower. But let's go ahead and take a look through some things first. Something else I'm going to do, I'm going to come into my edit studies and I'm going to turn on a custom indicator that I have built. This is something that won't be available by default in your Thinkorswim, but is available for import once again from my website, daytradingstrategies.net. I call it my backtest data study. And as I turn this on, this now populates labels in the top left that give us very important statistics about the performance of the strategy. This is just extremely useful when you are testing and optimizing a strategy. Of course, I can see the total P&L, win percentage, average win, average trade P&L, the max drawdown, which is a very important statistic. Right now on this stock, we're up $4,300 with a 48% win rate. Doesn't seem too bad. However, does have a pretty large max drawdown percentage. So even though it's green, I wouldn't consider it to be great on this stock in the current condition. Let's take another look as we load back in the scanner here. And let me actually show you a little trick we can do. Let's save this scan query. I'm going to save it as DTS Takashi Scanner. I believe that is how you spell his name. And now from my left-hand column here, I can just open up the DTS Takashi Scanner if I can find it. And since it is linked once again to my current chart, I have the chart linked to 2Yellow. I have the watch list linked to 2Yellow. Let me, of course, also turn on my custom column. Sorry, I can't type and talk at the same time. Custom column, this is our volume, 5-minute volume. So we can sort top down by that. Now, any stock that pops up on this watch list, just throughout any point in the day, I can quickly click on and load in. LGMK, this is the stock we've been looking at all day. Once again, the RSI at one point on this ticker out of market open got down to 3. That's what I'm talking about with extreme pullback. And actually, as you see on this thing, it's been so weak that it hasn't taken any trades today. The RSI has never gotten back above 30 for it to cross back below, which is pretty funny. ICON, this is another one just getting absolutely dumped on today. And once again, the strategy bought here because the RSI broke below 30, but then the RSI gets down to 13 and then it bounces. You see how like this is more so maybe the move we want to be buying. Of course, it's hard to say in retrospect when you see the bounce, but maybe we want to, in just taking a look through here, and this is kind of what we do. You're going to get a little bit of rants from me now, but this is kind of what I do in my backtesting process. You're getting to see it live. I've not built this strategy yet. Like I don't know what works in this strategy. You are getting to sort of see the process I do live when building, testing, and optimizing a strategy. So this is what I do. I look through and I sort of look at some examples and we sort of begin to get an idea of ways that we might be able to make the strategy better. And the first one that's coming to my head is, why don't we lower the RSI value? Let's get away from 30 and let's go down to a little bit more of an extreme number. So in the scanner, let's hop back into our custom study code here and let's knock this RSI value from being less than 30 down to less than 20. We're going to go from 152 results down to just 11 results. These are now the extreme of the extreme dips, which is likely what Takashi would have been scanning for. Now, of course, we also need to hop back into our custom strategy, and we need to change the buy condition from crosses below 30 to crosses below 20. You always want to ensure, and I always ensure that I build my codes this way, that the strategy and the study align. You're only taking trades in the strategy on stocks that would appear on the scanner. Else you end up with cheated results, right? You end up with results that look good, but you never would have taken because the stocks, you never would have seen the stocks, right? They never would have been on the scanner. Anyway, let's go ahead and adjust that. Let's actually go ahead and reload in our scanner here. Since I changed it, I'll need to reload it. So let me do that by turning it off and on again. That is how you fix that. And, oh wait, I'm sorry. I never actually saved it. Let me save it. If I save it, does it auto update? Let's see. Give it half a second. Did that change? I think it did. Yes, it did. Okay. Just make sure you save your scanner and it updates in your left-hand column here. Anyway, let's now take a look through some of the stocks. So we have CNH here. We are profitable on this name. It is currently at an 18 RSI, just getting hammered down. LGMK, we've already talked about this one. Actually, okay, it has now taken a couple trades on the day because actually it did. If I change my oversold level here from 30 to 20, just for the visual, that changes nothing about the code. It's purely visual. We actually did get above 20 on the RSI and bounce a couple of times, even on the extreme weakness today. WBD, Warner Brothers, this is a very, Warner Brothers is getting hammered. That's a big stock to be down that much. It's interesting. TEVA, down heavy. ZI, down heavy. I'm keeping an eye on my total P&Ls here. A lot of these, like, I'm not going to lie to you, they aren't working great. They don't look amazing. There's some nice trades, like this one on you is a nice trade. Let me do something here. Let me take a look. I actually have my volume turned off right now, which is maybe a mistake. Let me turn this on. I think volume could be an important factor here. Instead of just like a lot of these trades I've looked at, like let's go back to LGMK, for example. A lot of these trades I've looked at, they've just kind of been like consistently grinding down than the strategy buys. Like consistently, this one, not so much. This one actually did get a little bit of a rip. But I imagine, and from reading about how Takashi trades, that he is trading also very heavy volume pullbacks. One of his rules states that, like his pullback rule stated that it's typically on news. So that means that there will be a high volume spike at the same time he is entering. Once again, much like this DOW candle here. And not only a large volume spike, but also a large relative move in the candle, right? Not like this just sort of small grind stuff and then he buys. No, he's looking for this, right? He's looking for this trade here. Heavy volume, harsh move down, enter, look for the small bounce. So let's see if we can put those two conditions of heavy volume, large relative move into our buy condition, and let's see if that helps make the strategy a little bit better. So back here within our custom code, we are going to utilize the keyword and within our buy variables, meaning that the conditions are appended together and both must be true in order for the buy variable to be true. First, we will build heavy volume. This one's pretty easy. The current volume must be greater than the average volume, let's say out of the last 50 bars, times 2. So the current volume must be above the average volume. We actually need to offset this by 1, utilizing bracket 1 close bracket so that it's not trying to compare with the current bar, else nothing will ever return. So the current volume must be greater than the average volume over the last 50 bars multiplied by 2. We are also then going to add in the condition for large relative move. But first, let's just go ahead and run this and ensure that this looks like it's working correctly. Indeed, here on DOW, that sort of grind trade that happened here and looked pretty ugly did go away. Let's make sure the trade it took this morning is still there. We got very heavy volume here, and we can actually turn on an indicator to objectify this as well. Volume average, if I put this up over the volume sort of spot here, that yellow line now represents the average volume over the last 50 bars. We can see this candle had very heavy volume versus that, so still met the buy condition. Let's click through a couple of other trades here. LGMK, that sort of grindy one we talked about here did go away, while this one didn't. Seems fine. This one does still have very heavy volume, 3.5 million versus the average volume of 1.8 million. So just about 2 times. Oh, it's actually 1.7 million because it's using the bar before. Just barely met the condition there, but still works. Let's go ahead and click through some more. PACB just got heavy volume. I see green on this now, which looks okay. ARCC, I see green on this, which looks okay. Nothing big, but a lot of the names on here right now don't look like amazing names. They're all kind of crappy stocks. I would imagine that like building this strategy can be relatively difficult because I would imagine that getting really good trade setups for this is sort of rare. Maybe doesn't even happen every day, right? A stock trading heavy volume gets a very hard downturn, very heavy volume move, hopefully on some news. I would imagine that doesn't happen a lot. So what we're having to do right now is sort of use the data that's provided to us today. That's all we can do. Maybe we can look back at some situations that we might know to be true, a stock getting bad news, and we can look how the strategy performed. But what we're doing while optimizing can be kind of difficult because the stocks on the list don't look like good stocks. Like, would you really be looking at this LGMK 7-10 cent crappy stock? Would you really be looking at this and being like, yeah, I want to buy dips on this? No. Probably not. This is probably not something that would ever excite you, but it's just what we have right now. And we've got to work with what we've got to optimize and make the strategy as good as it can be. Anyway, let's also build in the condition that the move of the current candle is high according to the relative moves of the previous candles. This condition, once again, not extremely difficult, and we will once again utilize a new study to objectify this, being average true range. What the average true range study measures is the average distance from open to close over the last 14 bars. So if our current candle is greater than that times some multiple, we know the current candle is making a move larger than what the stock typically makes, which is hopefully what we're looking for here. So I'm going to once again utilize the keyword and. Now this condition must also be true in order for buy to return true, I'm going to then take the absolute value of close minus open. What absolute value is doing in this instance is if the close minus open returns a negative number, absolute value is just making it positive. That's all it's doing. So this will work for both red and green candles. Of course, every candle we buy should be red, so maybe that's sort of pointless, but I'm going to put it in anyway just to protect ourselves. Then this needs to be greater than the average true range value. Once again, we'll offset it by 1 so that it is using the previous average true range value. Therefore, it's not changing. We are only using static information that makes sure that the strategy doesn't cheat. That's very important, and I make sure I do that in all my strategies. Make sure that they don't go back in time and buy based on information that's already happened. If you're using static data, that doesn't happen. These strategies will only paint your buy and sell conditions in real time on the candle that actually just closed. Anyway, let's go ahead and also multiply that value by 2. So the current candle's move must be greater than the average move over the last 14 bars times 2. Let's go ahead now and run this. And let's see if any of our trades look different. LGMK, once again, we did get a pretty solid move here, so not surprised to see that trade still being taken. TEVA, we actually did get rid of. There was a trade happening sort of around here. We did get rid of that because it was just a little grind down. LGMK is the one we just looked at. Everything's sort of reordering because of our volume. WBDD, you'll actually notice, and maybe you have, maybe you haven't, been keeping track of the total number of trades here. You should see the total number of trades going way down on all these charts. The last one was just 13. This one is just 7. We're looking at the last 180 days right now on the 5-minute chart. And sort of as forementioned, these sort of ridiculously strong drawdown moves like this just don't happen that often. And that's okay. That's actually maybe not a bad thing. Strategies that you maybe don't just take tons and tons of trades on every day tend to be ones that work okay. What I want to do now, I think I like the way the strategy's set up, but I don't like any of the stocks being returned by the scanner. I don't really think like any of these stocks are really the kind of stocks I'm talking about when I want to buy harsh pull downs on. Let's go the daily chart, LGMK. This stock just sucks. I don't want to buy dips on this stock. It sucks. It's likely to continue sucking. That's what trend is. Trend is more likely to continue than it is to fail. I don't want to buy dips on this thing. Warner Brother. This thing is just, I mean, it's relatively stagnant. It's whatever. It's not the worst, but it's still not like some kind of great name that I'm jumping out of my seat to go buy dips on. STSS. This stock is awful. What are some other ones that are on here? MVST. This stock is just dying. I don't care. This is a lot of really weak, really crappy stocks that I shouldn't really be interested in buying the dip on. What's going to interest me is if a stock is strong. I mean, look at MVST here. Like, look at the move MVST made. I want to be finding stocks that are making bullish moves like this, but then getting intraday dips. So let's see if we can go work on the scanner to give us the right kinds of stocks to trade, because I think that's the largest issue we're running into with this strategy right now. So back within my scanner, I'm going to come in and I'm going to add a second custom study filter into the pencil icon, into the Think Script editor. Let's go ahead and say that the current price must be greater than the 200 length simple moving average. So simple moving AVG, open parentheses, set the length equal to 200. Basically, the current price must be above the average closing price out of the last 200 bars. So the stock is currently very weak, but macro, and we'll run this on the daily, so macro daily is still at least relatively strong. If I go ahead and run this scanner, we are now down to just 4 results. If I save this scan query so that it loads in my left-hand column, I see Warner Brothers on the list again. If I come out, once again, Warner Brothers, not that bad of a stock. This is the one I talked about, like, I mean, it looked okay, it's stagnant, whatever, it's not great, but it's not like as dead as a lot of the crap we were looking at. Back into the 5-minute chart, you will still notice the strategy is still red. Okay, what else can we change about this thing? We're still, I know we're 45 minutes into this video, but we're still very early on in the building the strategy process. I'm not going to like make this video hours long, but I don't know how to tell you this. Building a profitable trading strategy is really hard. It's not that easy. If it was that easy, everyone would do it. Everyone would be rich, right? But anyway, let's go ahead and take a look at some trade examples here. This one here, we buy, we get immediately stopped out, and then the stock bounces. This one we buy and it does continue down. Fair enough. That's going to happen sometimes. Let's scroll back. Here's another one. We buy, we get immediately stopped out, and then the stock bounces into our sell condition. Okay, let's go ahead and scroll back. Let's see if we can see some more trades here. Here's a really bad example. We buy, we get stopped out. The stock pretty much immediately goes on a really nice run. So maybe we need to loosen the stop loss just a little bit. We are super tight right now. I mean, first stock to close below your entry. This means when you buy, the stock has to immediately bounce or you get stopped out. Having those tight stops sounds good on paper, but if you're getting stopped out of every trade you take way too quickly, it leads to these sort of red P&L. So what I'm going to do, I'm going to hop in and let's go ahead and change up our stop loss. Instead of close less than entry price, let's do closes less than the entry price minus the ATR value. Let's add on, once again, that same ATR value. So we're sort of using the same. You don't want to end up using like 20 different indicators in a strategy. That is called overfitting. If you do that, you're just like creating way too many rules just so the back test looks good. So I want to continue using the same two kind of indicators that we're using here, but I want to add on that ATR value to our stop loss. So let's go ahead and set it up that the stop loss is when the current price is less than our entry price minus the ATR value. That just gives us that extra buffer to our entry price. And I really like using ATR in this way as well, because the more volatile the stock is, the wider your stop loss will go. Whereas the tighter the stock is, the less volatile it is, the tighter your stop loss will go. So it's sort of always adjusting to the types of stocks that you are trading stop loss. Now we are still red in the stock, but you will notice it did get better. Let's go back and look at some of those trades here. I actually believe this was one. Yes, you bought the pull down. It did close below your initial entry price, but not down low enough that you got stopped out. Then you got to take advantage of the bounce. That's what we're looking for. Let's click through some more trades here. We have ARCC. This one has only taken 7 trades and up $169. Just once again, not a very volatile name. I mean, over the last 180 days, this thing has only been in a range from like $23 to $19. Not an extremely volatile name. And then IP, another one that's not extremely volatile. We're just not getting like a lot of great examples to look at. Let's see if we can find some good examples. Like, let's see if we can find some instances, kind of like NVIDIA not that long ago. NVIDIA obviously is NVIDIA, and then it got hammered on some news. Let's sort of see like how the strategy would perform on moves like that. I don't know. This is the day that NVIDIA got hammered on news. It ends up buying pretty much right out of the open because the RSI is all the way down at 8, and NVIDIA just sort of continues pulling back from there. I don't know. I'm struggling. I'm not going to lie to you. I don't know exactly what this trader was doing. I mean, turning 13 grand into over 153 million isn't easy. I feel like I'm trying to unlock the secret right now, which is actually kind of what I love in coding. Like, I'm loving this, but let me do some work here. Let me see if I can figure something out. I don't want to like keep trying things live in this video, else it might be 3 hours long. Let me see what I can get figured out here. All right, so this code is kicking my butt. I know we just jumped to a new clip here, but I've been working on this for about an hour now, and I sort of had a thought. I sort of just maybe assumed that he didn't take a lot of trades a day, according to what the strategy was looking like on my end, but I actually decided to, look it up. How many trades a day would Takashi Kotegawa make? And apparently he was a high frequency trader. He was taking hundreds of trades each day. So maybe I'm going about sort of this strategy in the wrong sort of way. So I'm going to try to build something much more high frequency now. So I've changed up the scanner just for testing purposes. I want to see stocks that are very volatile. Assumedly, those are going to be the kind of stocks you want to trade. So I'm now looking at stocks that have a beta value greater than 5. Beta is a measure of the volatility of the current ticker versus the volatility of the S&P 500. So essentially, I'm looking at stocks that are at least 5 times more volatile than the S&P 500. We have names like WULF, MLGO, APLD. Let's go take a look at some of those names. And of course, you'll notice we are taking a lot more trades. That's sort of now what I'm aiming for. Maybe I should have done that research before I started making this video, but hey, we're here now. Better late than never. Apparently, Takashi was a high volume trader. So we're still looking at the 5-minute chart here. We're just taking a lot more trades, and I'll talk about the changes I made in the strategy in just a second. Let's look through some of the names I mentioned. MLGO up $68,000. Looks pretty good on the statistics as well. WULF up $11,000. Seems pretty good. What was it? APLD? Is that what it was? Yeah, APLD up $14,000. So these are very volatile names, likely the kind of names you want to trade with a strategy like this, and we are trading it at pretty high volume. I mean, we are looking at the last 180 days on the 5-minute chart, and APLD's taken 804 trades. Wolf has taken just about 800 trades. MLGO has taken just about 800 trades. So the tickers are averaging 800 trades every 180 days. I don't know exactly what that math is, but it's something like 4.5 trades a day per ticker. Of course, if you're trading multiple tickers, you end up taking a lot of trades a day. So what did we change in the strategy code? Of course, here it all is running for you to see and potentially copy, but the main thing I changed, I believe that I was misinterpreting buying dips as buying weakness. So I've gotten rid of that buying weakness idea out of the strategy. We are now not buying when the RSI is less than 20 or anything like that. We are buying anytime there is a red candle, anytime the close is less than open, and I still have that absolute value close minus open is greater than ATR. So it's a red candle that is larger in relative size than the 14 candles before it. That's it. That's the buy condition. If anything, I've actually simplified the strategy as well, because now also my profit is just first candle to close over our entry price, and our stop loss first candle to close below our entry price. It's that easy. Once again, I've actually really simplified the strategy. So even though it's taking a lot more trades, it's really easy to understand now. If you get a green candle after you buy, sell for profit. If you get a red candle after you buy, sell for the stop loss. I've also added a catch into here to exit at the end of the day, because I noticed in my testing, sometimes trades are being held overnight if they were bought right before close. Of course, that was one of Takashi's rules to not do that. So that's what this line of code here is doing. So once again, if anything, we've simplified the code. Anytime there's a red candle that is larger than the relative size of the 14 candles before it, we buy, and then we're selling the close of the next candle. Obviously, if it's green, we make money. If it's not green, we lose money. And obviously, given enough time on volatile stocks, it seems that buying relatively large red candles and then selling the close of the candle after it can be a profitable strategy. If anything, a pretty profitable strategy, which is interesting to look at. Once again, kind of the maybe why this doesn't work for most traders, because you're going to look at this and you'll be like, Trey, that's almost too easy. A lot of times, codified trading strategies like this can be overfitted. Like someone's got 20 rules for why they buy and why they sell. And you're like, okay, you just overfitted the data. That's not actually going to translate. This one you almost look at and go, Trey, is that too simple? Is there something wrong? I think the reason this isn't going to work for most beginner traders is because you have got to be disciplined. You've got to sell the close of the candle after you buy every single time. You can't get in a trade like this and go, oh no, I'm red, but it's going to bounce. It's going to bounce. I'll just hold. Oh, look, we got a green candle here. I'll just hold. Oh, it's down. I'll hold. Maybe I'll add to the position. I'll hold. It down more, panic sell. You can't do that even once or twice. You can't do that, or you're really going to screw up the statistics. This strategy, really any high frequency trading strategy, especially one like this, requires discipline. That's what code can help you provide. The code will always be real time painting the buy and sell signals on your chart. So you will know, hey, I need to buy here. Hey, I need to sell here. And you will understand, according to the statistics that you can see on the chart you're trading, that even if you do take a losing trade, you're going to take losing trades. The strategy has a 57% win rate. Over time, this thing is known to make money. This video was supposed to be sort of easy. It was supposed to be, let's go over this guy's strategy who made a ton of money. Let's build it in a scanner within Thinkorswim and see how it works. It's sort of turned into like a whole live lesson on the detailed steps that I take when building, testing, and optimizing a strategy. This video is going to end up being an hour long now, but hopefully you enjoyed it. You sort of got to see the whole process. Very often, I just make videos where I throw finished strategies at you guys, tell you how they work, show you the source code, go over some trade examples, sign out, and that's the whole video. Today, you really got to see the creation of it from start to finish. Hopefully you find value in that. If you made it to the end of the video, it seems like you did. So if you did learn something, please take the half second to hit the like button. If you'd like to continue learning, make sure you subscribe to the channel. Once again, this strategy, this scanner, this study here, this backtest label study, which is, I think, the most impactful study I've ever made, all available alongside over 130 other custom Thinkorswim codes on my website, daytradingstrategies.net. They are all extremely easy to import. Thinkorswim has an import system. I have share links under every single code on the website. All you do is paste them into this open shared item, and they're in your Thinkorswim. That's it. It's all extremely easy and simple to understand. Once again, the website will be linked in the description down below. Go over there, read the reviews, decide if it's something that can help accelerate your trading journey. And if you decide it is, sign up and become a better trader today. With all that being said, I'm going to go ahead and sign out of this video, and I'll catch you all in the next one.